Okay, guys, thank you. All right, today is the 16th of June, 2025. I'm going to cover the crazy revision for the indicators, and I think that it's a very important time for you to listen. Right, I always see that we have about 24, 25 people listening to the market outlook, but then when it comes to revision, at least 6 or 7 of them will just drop off. I mean, okay, if they are really well versed in the system, I am fine. All right, but if they are not itself right, then I think that there's no point because if you don't learn then listening to me isn't going to help you helpful unless you're taking just once my market outlook. So I really think that you should consider to listen through the session, right? Because I don't get anything from here, but I just want you guys to basically learn something more important so that you will not lose out. Yeah. Okay. So let's go to the market right now. Just give me a moment. I bring in the charts in. Okay. So let's just revise what happened on gold last week itself. Yeah. Okay. So gold last week was very clear cut. It was a buy, all right, because the opening price was at 33.86. The MLP was at 33.71. So as long as it's above OP, it's a buy. Now, I already said this many times before. There's a difference between swing trader and follow-through trader. So let me explain this again and again and again. Now, swing traders are people who basically try to buy low, sell high, which is a good thing, right? If you think from the angle. But if you think about this itself, right, this buy low, sell high has been ongoing for so long, and yet people are still doing it and they don't make money. That is the point. They don't make money because you see, buy low, sell high is good if the market rebound. Buy low, sell high will be good if the market is in a sideways trend. But when you do buy low, sell high, what if the price goes lower? Should you buy more? If you don't buy, it sounds so silly. If you bought some more, the price go lower, you get more trouble. And if you don't buy again, that give you even more trouble. So that is whereby the buy low, sell high strategy doesn't really work. And you look at it itself, 100% of traders, actually about 90% do buy low, sell high strategy. You know, all the textbooks, all the trainers teach you this. But if you look at it right now, where 97% of the people don't make money from the market, and people are still trying their best to redo this over and over again, isn't that very silly? It's like telling me yourself, right, the answer is wrong, and you just tell me the same answer when I tell you it's wrong. So all I can say is this, guys, follow through trading has its merits and its downside. Let me explain to you. Now, the downside of follow through trading is that you don't buy low, sell high. All right, you don't have the type of adrenaline rush whereby you try to pick the bottom from the market, the factor itself. But the thing is this, okay? When you say follow through, right? When the market is above OP, you just buy and you just hold your position until to the end of the day. I can tell you that, right? Look at it month to month, you will see that your result will be better than you do swing trading. Okay, and there's no headache because you will know exactly where to put a stop loss. You know exactly to hold a position. The only thing is this, whether you add a position or not, that is up to you as individual. But the thing is this, as long as you hold your position. So, for example, right, if you buy a gold at 3386, you buy a okay, let's say you buy gold at a price of 3388. Let's say you bought here, right? You bought the gold and you hold it till end of the day closing, not sell the high, the closing. The closing was 3432. The high itself is 3446 is the highest point, right? So from here to here is how many dollars you make? $12 plus $32, you make $44. Oh my goodness. Now, when's the last time you make $44 holding a position the entire day itself? Let me ask all of you online right now. How many of you has ever hold $44 of profit all the way from opening to the closing of the day? Yes or no? Please key right now in the comment box. Yes or no? Okay, so we can see the numbers coming in. We can see that Dylan say no, Louis say no, Susan say no, Carl say rare. That's good. ACS say no, Low say no, Wong say no. All right, Janet also say no. Okay, so I can safely say that I have not seen many traders trading gold and hold for $44 of profit and then don't take profit. I think for the first $5, $10, some of you take half profit already. Then after that, some of you may hold a position for another $10 to $20. But the whole $44, I don't think so. Even myself, I don't do that. Okay. All right. I hold position. but without the intention to hold for $44. Okay. So you think about this, would that be better? Now, the days that we will lose out money is when the market swing like this, whereby the market swing like this. Okay. This type of day, you don't get much meat from there because the market retreated from the directional market to recover to the mid drift. But that is how many times? So you see a couple of times whereby you just buy and hold, buy and hold, buy and hold, sell and hold, sell and hold, buy and hold, buy and hold, sell and hold. You see that overall itself you make money. Don't you think that is better? Correct or not? All right, so this is something that I want you to reconsider as a trader, right? But of course, the market is up by 3 days already. So usually the fourth day itself, the market may be sideways. You see, I tell you again, so take note of that. Okay, so this is the goal. So again, you may ask me, why do you mean by why it might go sideways? It's a very simple mathematics here, okay? 1 month itself has 30 days, right? 30 days. All right, 4 weeks is 7 days. So 7 times 4, 28 days, right? 1 month got 30 minus 28, that means the difference here is 2 days, right? So which means that every week there's 5 days for trading times 4, right? Then plus 2. So final number is about 22 trading days each month. Okay, very systematic way of calculation, yeah? Okay, then I made a cross-check across many years. How many things, how's the thing looks like? So of 22 days, I realized that there are about 4 to 5 days, the market will be a swing, or means doji lah, yeah? Okay, doji. Then the remaining will be 18 to 17 days, that will be one way or half a way, okay, at least something directional. So guys, take a look at this right now. If we do a ratio between them, okay, a ratio, okay, so it's about 1:3, right? So 1:3. Agreeable? Yeah. So that means that if the market is trending 3 days in a row, then likely the fourth day is a very high chance of a doji. Can understand this. If you understand this, press the next number, which is number 6. Now, this is actually PTP knowledge that I share with people who paid money for that itself. But of course, end of the day, you will have to, study that itself. But if you actually understand this, you got it good. Then you know why certain days you trade by holding position, certain day you don't hold position. Yeah. Okay. All right. So this is the gold chart over here in the morning session. So once the market opens for gold, there's a 4 stack diamond. You draw a line across it. And once it's above OP, you buy gold and let it run up all the way to KTR plus 1, right? So congratulations. KTR plus 1 was given at very fast speed. Within half an hour, it was done. Then after that, you go to KTR plus 2. You can see it's done also. Then at KTR plus 3, that's it. And although it was above pivot 1, right, but things that above OP, above pivot 1 is a buy, but KTR plus 3 already given, definitely that's where I usually don't trade anymore. So please take note of that. When the market hit KTR plus 3, that's it. Don't trade anymore. Enough already. Yeah? Okay. So the thing is this. Why is that so? Remember the standard deviation. I'm going to bring it back to you again. All right, pardon my bad drawing. But the thing is this, the numbers are clear. All right, KTR plus 1 is 80 to 85. KTR plus 2 is 60 to 65. KTR plus 3 is 40 to 45%. So which means that, right, once the market hit KTR plus 3, sorry, we already hit a maximum level. So if you see got diamonds here, but the diamond is supported by the KTR plus 3, it's not going to work. Neither you get a strength. So you really want to trade, then you must at least go to KTR plus 2, because to go to plus 3 itself is 40 to 45%. And then because the diamond involvement, you can put the diamond in as a trade. Yes, at least you can go for it itself. So once you go past KTR plus 3, I'm not very keen to use the diamond trade anymore. All clear? Same thing, KTR -3, once it traded there itself, I'm not very keen to use the diamond trade anymore after KTR -3. All clear? If all clear, press number 7 right now. Okay, all right. So today you can see that it's a very, very good sharing session. So that if you guys, want to learn system trading, this is the right way. And you can see it's very, very scientific approach. Yeah. Okay. Now I'm gonna go into details on how to trade with the diamonds. So let's follow me. So you can see that first of all, there's a stacked diamond. You draw a line across it this way. Now, where's the stop loss, right? By right, where the diamond is where the stop loss is. But if the stop loss is too near, place it at the nearest trough, and this will be your entry and your stop loss. Okay. By right itself, you should put it here, yeah, for stop loss, the one in the middle. But if you do that, the spread itself will likely hit you. So we don't do that. Yeah. So we will do this our entry price. Now, when the market is above the line, buy right can go in, but because it's so near OP, I rather do it for you do it until it goes above OP, then you buy. That will be safer. So stop loss, you can put it here, and this is your entry price, your buy. So first profit is given at KTR +1. You must take some profit +1 first. Even though the KSI is green, you can hold to the end of the day. But I'll just say that for you guys, try to hold, take some profit first to feel safe and also give you the confidence to hold it till the end of the day. Yeah. Then go to KTR +2. There's a second profit here. We're all done. Now the question is this: when the market comes down and turns red color, should I cut my position? Well, no need, because first of all, the OP is here. Second, the market KSI is green, KSI is black, so there's no need to cut your position. No need. All right. But of course, if you panic, then up to you. Yeah. So if you follow my strategy, take profit at KTR +1 and then take KTR +2. Even you see the price pull back down, you won't be upset because you already got basically 2 profits already. You can hold a position. So after that, the market goes back up again and go to pivot 1, and that's where you can see a lot of resistance over there. But once the market goes past it, the market goes all the way to the top. And once at the top itself, right, you can see it's already above KTR +3, so we don't really want to chase after the market. Then after that, the price has to come down, right? And we have the first diamond on here. And what can you do? Do the same thing. And then you realize that there's an issue here. The market has no intention to go up at all. So the thing is this, the market came back down to retest the pivot, and the pivot say, okay, nothing much to tell you. You just have to wait for a while. And then the market rebounded again. We have the 4 diamonds, which again have no impact. And then after that, this is the one that take the canvas back when the market basically still below pivot, still below the white line. Okay, still below white line. And the thing is this, you can see very clearly the boys have been selling. And of course, that's when the market breaks down and they go for the kill, which when the market came down and broke below the pivot 1, right below 1, and that gave the very strong acceleration downward south. Okay, so that is how you would have traded based on that if you really want to do that. Okay, then after that, you can see what happened over here. We have another stacked diamond. You just draw the line accordingly. Sorry, a blue diamond here first. The price went up all the way to a new high, and then the price pull back, and then the 4 diamonds appear. You draw a line across it. You can see that the market after that just couldn't recover. Very, very similar recently itself, right? Where you can see that people telling you to buy something, and then with the next moment, you know that they dump against you. This is a very typical thing that happens in the industry. Yep. Okay, pump and dump. So after that itself, you can see that the market has a diamond, in fact, a stacked diamond in this case. You hold it on, and then you can see that the KSI is really green and the KCX is really black. But of course, if you see this thing happening and you know that you basically get it correct, you just have to follow through and then make sure you do it properly yourself. Yep. Okay, so that will be all for today's revision. I hope that you got a lot of insights for today, especially the numbers game and stuff like that. We'll talk more later on in Telegram. Now, today I'm a bit busy because I got a lot of things to settle, so I hope that you understand this. All right, that'll be all for today. Thank you very much. Take care and have a great day. Bye-bye.